Okay, good evening, everyone. Welcome again to another episode of Sequoia Lending, Wednesday night training. So, for the last few weeks, we have been talking about different type of scenarios, how to build a commercial lending business. We even have an episode to talk about how do you filter out your client, because many of our agents express the frustration that, hey, I'm sending in a lot of deals. How come they're not getting closed? So on and so forth. So again, we've done a lot of those trainings. So hopefully you can go to our YouTube channel, watch some of those trainings that we did in the past, and really understand how to filter out the clients. So obviously in our Sequoia platform, we don't need you to be an expert to structure the deal, so on and so forth. But however, we do need you to at least to learn how to filter out the client. Quite frankly, not all the clients that we can close deal with, from whatever reason. It could be the client, it could be the project itself. There are many different reasons that we cannot get deals done, right? So if you spend a little bit of time to filter out the clients, to understand what the profile looks like, and perhaps, there will be less frustration. There'll be more deals that can close. So are we closing deals? Absolutely. We are closing deals, almost on a weekly basis. I think we have 2 deals closing this week and a few more closing the following weeks. So in today's episode, I want to share with you some case study to show you exactly what type of deals that we are able to close, so that you have an idea how to, what kind of deal that we can do, and so that you can focus on what I call the low-hanging fruit. Now, one thing that a lot of people got excited about when they come into commercial lending is that they will get excited about what I call the big deals. Yes, very easily you can run into something that it's 10 million, 20 million, not even talk about that big, right? You can very easily run into something that it's 5 million, $2 million deal. People got very excited about this. But however, this type of deals are not easy to close. So for those of you who actually been through the training calls with us, or the 3-way conference call with either myself or one of our advisors to talk to your client, and especially you have deals that is above $10 million, that is not easy to close. It takes a long time. I'm not saying that we don't want to close those deals, but what I want you to focus on is the deals that you can close fast, that you can close, and in 30 days, you can get a paycheck, or in some cases, even less, okay? So today, I'm going to share with you what are some of this, what I call low-hanging fruits, that you can just pick and close. While you are doing something like this, you will run into a deal that might be surprise to you. So for example, I'm not sure if he's online or not. One gentleman that submitted a deal that needs $500 million. And quite frankly, we found a lender that loved that deal, and we're working on the paperwork right now. But again, we close a lot more deals that it's, fix and flips, 1 to 4 units, bridge loans, so on and so forth. So today I'm going to share with you some of the deals that we closed this year and give you an idea what to look for. And of course, for each one of these deals, I'm going to share with you what they are, how we structure the deal, and how to put them together. So before I start, I want you to at least subscribe to our YouTube channel. Get to our YouTube channel. If you have not yet subscribed to our YouTube channel, just go to www.youtube.com/@Sequoia Lending. That is our YouTube channel. We have, every time when we do a training like this, we will record it and put it up there. Spend some time to learn about the commercial lending industry. I'm not sure who is out there teaching people how the commercial world looks like. So if you really want to dive into commercial lending and want to make money from it, I suggest you to go in there and watch some of this video, and there's tons of information, not necessarily just by myself, but we have many other advisors that are out there to share their knowledge about the particular field. We have advisors that talk about AR funding, talk about marketing, talk about commercial loans, so on and so forth. So that is a pool of wealth of knowledge in that channel that for you to look for. Now, specifically, if you are new to Sequoia, or if you're new to commercial lending, specifically, I want you to watch the following videos. Number one, I want you to watch the commercial loan basic. Okay. Many people come to us saying that, hey, what is the interest rate? How come your rate is so high? How can I, what is commercial lending? What can you do? So in this video, I give you many detailed explanation what commercial lending is all about. How do we price interest rate? How do we put the loans together, so on and so forth. So that is a very, very good video for you to watch. The second video I want you to watch is what we call the rule of the game. What game? The commercial lending game. So to a lot of people, why are they frustrated? It's because they do not know how to filter out the client. Remember one thing. Every single one of us right here in this room, we have our filter system, which is our website. What goes in, what comes out. That is the law, right? So you have junk goes in, junk comes out. That is nature. So before you put something in there, perhaps you want to understand what is the rule of the game, why some deals can close, why some deal cannot close. And if you follow the rule of game, and if you follow the guideline, the closing ratio will be much, much higher. So yes, even though you can just dump everything into it and let us filter them out, but at least if you understand the basic, you wouldn't be that surprised when a deal is not closed. So for example, let's say somebody come in here asking you for $5 million. When you ask for $5 million, all lender, regardless who they are, they all look at a few things. The first thing that they look at is how liquid are you as a client? You're asking for $5 million. Show me what is your liquidity. I'm not going to give you 100% loan. Okay, you have to have money in the game. So if somebody come up to me saying that, oh, I need a $5 million, but I only have $1,000 in the bank, do you really think that is going to work? Absolutely not. Okay, so again, I suggest you to take a look at that video. Oh, I can give you another perfect example. Somebody come up to me saying that, oh, Alan, I have a single family home. I own that single family home already, and I want to do a refinance, and my credit score is 500. Can you give me 80% LTV? No way in anyone's right mind will give you 80% LTV when the credit score is at 500, right? I might be able to give you something. Perhaps I can give you 30%, 40%, or even 50%, but no way that I can give you 80% of that property. That is the rule of the game. So a lot of people saying, oh, why can you do this? Why can you do that? It's not because we cannot do it. It's just because that particular client does not fit into the game. Okay, so again, I suggest you to watch the video, rules of the game. And another thing I want you to watch is the real estate product reviews. We have so many different products out there. What is 1 to 4 unit? What is fix and flips? What is working capital? What is equipment loan? What are they? Okay, I see a lot of people submitting one type of loan is called gap funding. But what is gap funding? Why do you need to use gap funding? A lot of people don't gap funding is not for everyone. It's not for everyone. But to a lot of people, they would seem that, oh, this is an easy one. Let me just apply for it. But they might not fit that client. So most important is to ask them, what do you need the money for? Right? Let's say they need gap funding, but turn out to be that they need the money to purchase an equipment. So equipment loan is a lot more cheaper, a lot more faster to fund than a gap funding if we know what is the use of the funding, right? So on and so forth. So again, that is what I would like you to watch that video, real estate product review. And then of course, the other one I want you to watch is the Sequoia processing. When you submit a deal to us, how do we process the loan behind the scene? Okay, you need to understand. A lot of people just think that, oh, I give you some documentation, so magically the loan's supposed to come out. Magically, you're supposed to close the deal. It doesn't work that way. So the processing means that when we underwrite a deal, we need a certain type of documentation so that it can meet the criteria, meet the requirement from the lender. And if you do not, or the client do not provide us the documentation that we need, and guess what? We are not able to close that deal. So you need to understand what the processing is behind the scenes. So I would strongly suggest you to watch at least these 4 videos to understand what commercial lending is at the very, very basic level. So of course, then there are many other videos that you can watch. What is gap funding, mixed use, construction loans, 1 to 4 unit, you name it. There's tons of information right there. So that's the first thing that I would like everybody to do, to look at least to educate yourself. Because remember one thing, what are we doing right here? We're not just trying to close 1 deal or 2 deals right here. What we're trying to do right here is to disrupt an industry. In order for us to really, really do that, you need to arm yourself with knowledge. When you go out there to talk to client, you need to know what you say. When you go out there to talk to real estate agent, you need to know what to say. A lot of people are asking, hey, where's your training? How do I get trained? How do I become good? This is the place. You don't have to come to the Wednesday night meeting. I understand that. So we all have a busy schedule. I'm here on the East Coast. Many of us is actually on the West Coast, and right now over there it's like 5 o'clock in the afternoon. Is they still working. I totally understand, but at least take some time once a week. Take at least 1 hour a week to understand, to study this industry. That is how you build an empire. Okay. So without further ado, let's talk about some of the deals that we close. We close many deals. We cannot possibly talk to you about every single deal. And some of those deals are pretty boring. For example, like investment property, 1 to 4 unit, there's nothing to talk about. It just, just submit a deal and everything works out, we close. But what I want to share with you is some deals that is very interesting. And as a matter of fact, many of them are opportunities like this. These are the type of deals that I love to close. Many of our agents love to close. Why? Because when clients come to us, they don't have any other options. They're just looking for solution. They're not here to negotiate interest rate with you. They're not here to nickel and dime you. Whatever you percentage them, as long as it's a reasonable loan, they will take it. Because again, the purpose of using that loan, the purpose of getting that loan is not for, it's for many, many other reasons, which I'm going to share with you. So let's talk about the first one. This particular one is in Pasadena, Maryland. This client owns a trading company. He purchased a lot of stuff overseas and put it into his showroom and then sell it to distributor. Put it this way, okay? So for this particular one, he came to us and saying that he needs funding immediately. He needs funding about 2 weeks. And the reason for that is that he has a shipment comes in. He needs the money to renovate that building so that he can ready for the shipment. He has some sort of particular product that comes in that he needs to probably he's working on a showroom to try to arrange it to make it impressive for his client or whatever that might be. So he needs money immediately. He cannot wait. So now think about this. A lot of people are asking, hey, what is the interest rate, right? So one criteria to pricing the interest rate is what? How fast do you need the money? Watch Commercial Basic. I will talk about that. There are 4 things that I talk about. How much money do you need? What do you need the money for? How fast you need the money? And how long do you need the money, right? So in this case, we ask you, how fast do you need the money? He's saying that I need it in 2 weeks. Now, think about this. If they need it in 2 weeks, can you go for a traditional loan? Absolutely not. There's no way that you can go for a traditional loan, because when you go for a traditional loan, what happens? They need to do an appraisal, they need to do evaluation, so on and so forth, and it takes a long time. Normally for loans like this, it takes about 30 to 45 days to close. So now we understand the needs of this client. He needs money. How much he need? He needs about $350,000, $400,000 immediately. So immediately is the key word. So once we understand what he needs, now we know which lender we go to and how do we structure the deal. So for something like this, it's not even a bridge loan. It's what we call the hard money. Now, hard money is that the lender will come in. As long as they like the property, As long as they like the property, they do not care about your credit score. They do not care about your income. They don't care about anything else. And they will just give you the money based on the value of the property. Okay. So this particular property right here worth about $750 some $1,000. The good thing is that this client already pay cash for this particular property. It's all free and clear. Okay, so there's no mortgage to pay off. We can definitely go in and give them 50%. Now, in order for us to close a loan very, very quickly, in the back end, normally we will look for a lender that is local to that property. So for this one right here, we look for a lender in Baltimore. Okay, Baltimore in Maryland and Pasadena, Maryland is only about 30-40 minutes drive. So we call up the lender. The lender likes the property. Most likely all the lender would do what they call desktop underwriting. Okay, they look at what the property address is and they pull out the profile, and immediately they know, especially local lender, immediately they already know, what is the value of the property and if they like it or not and things like this. So for this particular client, they liked it, and even though the property is vacant, and remember, he's using the property as a showroom. So what does it mean? It means that the property does not generating any income. So we cannot use a DSCR loan. We have to use a bridge loan or hot money loan. So this lender looked at it, they liked it, they drove to the client's property and looked at it and walked around, talked to the client and find out what he wants to do, find out what other business that he has. So in 10 days, we funded this client $375,000. Okay, no appraisals, no of course, we need to do title, but no appraisal, no inspection. Well, yes, they did. They walk around the building, so you can call that as an inspection. So again, very fast, 10 days. So there's a lot of opportunity out there where people need money right now, especially business people. They need money right now. Okay, so if they have a property like this, it's much easier if somebody just come to you saying, hey, I need $100,000, $200,000 a working capital. For working capital, it takes a long time because, again, there's no collaterals whatsoever. The lender needs to underwrite that loan based on what? Based on the revenue, based on the income from that business. That takes a long time for them to underwrite. But versus this client right here, he has a property right here, so we don't even care about what he does. We know that he has a business. We know that he needs the money to renovate that building. But because he has a property right here, make things a lot easier and much faster to give him the give him the money. So remember one thing, guys, right here is that our specialty is to find out, put a solution together to help our clients. We don't compete on rates. A lot of people come to us saying, "Hey, Alan, what is your rate? How can you bid this? Can you bid that?" I don't play that game. We don't play that game. You don't want to play that game. What the game that you want to play is that, hey, I'm a consultant. I put the package together. I put a solution together for you. Okay, so remember this. If you're out there trying to compete rates with other people, you will never win a business. But however, if you understand your client and provide a solution together, you and I, we together with the advisors, we provide solutions together, and that is what the value that you will provide to the community, the value that you provide to your clients. So that is one thing. That is this one. It's a bridge loan. The second one that I want to talk to you about, this one is also very interesting. This looks like it's just a 4-unit property, right? 4-unit property, 1 to 4 unit. There's nothing special about this. As long as the rental is it's right, we can get it done. Okay. Okay. Now, what is so unique about this one is that the client himself does not have the money. He has to borrow money from someone else to use it as down payment. Now, when you are purchasing investment property, and maximum for 1 to 4 unit, maximum the lender can fund is 80%. In today's market, I see about 70-75% is more than the norm. But for this particular one, we are able to, the rent comes in, are able to cover 80% of the debt. So we are able to quote him an 80% loan, which is fine. Now, the other 20% supposedly come from the client, and the lender do requires to review the bank statement from the client. Normally, they ask for 2 months of bank statement. You need to show them that you have the 20% down. Otherwise, there's no way that they can close the deal. However, with this particular client right here, he does not have the 20% down payment. He has to borrow the money from someone else as a gift fund to purchase this property. Now, if you are in a traditional world, let's say you go to the bank and same exact scenario, and you tell the bank that, hey, I need to have a gift fund. Most of the time, the lender will have a lot of restrictions on how much gift fund that you can take. Sometimes they will say that, okay, you can only take X dollar amount of money. Sometimes they will say that you can only take a percentage of a gift fund. You have to have your own money in the scheme, whatever, depending on the lender. Different lender have different requirements. But when you come to commercial lending, it makes things so much easier. And that is why a lot of the real estate agent out there would love to partnering up with us. So again, ladies and gentlemen, remember this. Go out there, understand how gift fund works in commercial lending, and now you can share with your real estate agents and loan officer whatever they cannot do out there. We can definitely do right here in the business loan. So the way that we work in the business loan, when they purchase a property, they have to purchase it under an LLC. We do not fund anyone if they have purchased a property under their own personal name. Yes, we do have lenders that can do something like this, but we do not like to do that. We have to have them to set up an LLC to purchase that property. It's very easy to set up an LLC, not that difficult. Normally takes about $100, $200 to set it up. Very, very easy to do. And also it's protect the asset protection also. Okay, I'm going to talk about that in another subject. So again, when they set up an LLC to purchase a property, they have a few pieces of documentations. The first documentations that they have is something called article of organization. Okay, you set up an LLC, article of organization. They also have the second piece of document called operating agreement. Operating agreement shows how many members in that LLC and what is the percentage for each members to own that own that LLC, so on and so forth. So now, when this client purchased this property, he set up an LLC, just got his name on it, John Doe LLC. Okay, now because he lack of fund, he need a gift fund to use the gift fund as down payment. So what we decided to do is to add that giver, whoever the person is, to give him the money onto the operating agreement. So now instead of one person LLC, now you become two person LLC. John Doe and Mary Doe. Mary Doe is the one that with the down payment. John Doe is the one that purchasing it without the down payment. So in this case, there's no such thing as gift fund, because now we are funding what? We are funding the LLC, and the LLC got two members in it. And now, as long as this two member can show total deposit, regardless where the money come from, it could be from 50, could be from both people, both member, or you can just come from one member. It really doesn't matter. So now we can close that deal. So that is one of the tricks that we always use. And oftentimes, if you talk to a traditional loan officer or a regular real estate agent, they keep asking you, hey, can we use gift fund? Can we use gift fund? What is the regulations? What is the rule? Whatever that might be. On the commercial side of it, very easy. Just add that person onto the operating agreement. Then there's no gift fund. There's no regulation, not regulation. There's no restrictions how much money that you can use. Okay, so that is the uniqueness for this particular property. Okay, let's move on. The next one, it's a mixed use. Now, this one actually is not that unique, but what I want to share with everyone is that yes, we do fund mixed use, and we talked about that all day long, and we fund them all day long also. So mixed use is what? Mixed use is that you have retail in the base on the street level, and you have what? Residential on the above level, right? So you have commercial and residential mixed in one particular property. So for this particular one, it's a pretty standard loan. I just want to share with you, yeah, we can definitely do something like this. Now, whatever I just share with you, whether it's mixed use, this particular one, 1 to 4 unit, these are not difficult loans to do. Normally takes about 30 days to get it close. Okay, so where do you find these clients? Watch my video last week. How do you build a commercial lending business? We in this business do not look for clients. What do we look for? We look for partners. Who are these partners? Real estate agents, loan officers, insurance agents, contractors, CPAs, I name it. These are all professionals. Remember, burn that into your brain, okay? Burn that into your brain. When you talk to people every single day, who do you talk to? What do you look for? How do you build a business? Not to go out there to look for clients. Look for partners. Let them know what you do. Let them know that you have the ability to close deals like this, and they will keep sending you deals. So this is mixed use. Now, equipment loans. We do a lot of equipment loans. And as a matter of fact, equipment loan, it's actually one of the bread and butter that we have right now. This type of loans, very fast to fund. Normally takes between 3 to 5 business days. It will, it will get funded, and you will get your business, you will get your commissions. So for this particular one right here is a restaurant. He is purchasing some sort of a refrigerator, only $15,000. Now you might think $15,000, man, that is so little. Should I take that or not? Well, $15,000. I tell the client that, hey, we have our minimum cost for doing all the loans. Okay, so we charge them $2,000 flat fee. $2,000 flat fee, right? So that is what? That's more than 10%. Okay, so $2,000 flat fee, and you might think, oh, 2,000, that's nothing. But you know what? It took us like 7 days to close it. 7 days. I mean, I would get a $2,000 every 7 days. I take that all day long. So for equipment loans like this, as long as the equipment loan is less than $100,000, and the business, it's in operation for more than 2 years. Now, this is the trick. Okay, this is one of the video that you need to watch in the rule of the game. How do you filter out business people, a business loan? How can you guarantee that the business loan that come in, the working capital, equipment loan that come in, you can fund them like this? Remember, go out there, look for clients that has been in business for at least 2 years, and the equipment is less than $100,000. In this case, 90% of the time, all we need is just one application. I hope many of you, hopefully you've seen that application. Very simple, 1-page application, and plus an invoice from the dealer to show them, what type of equipment that we are purchasing. Now, the invoice is very important. A lot of people just print something from the internet, do a screenshot saying that, okay, this is the equipment that we're purchasing. I cannot use that. We need to have an official invoice from the dealer. Let me explain to you why. The most important thing is that obviously we need to look at what kind of equipment that you're purchasing. If you're just purchasing a refrigerator, okay, fine. What is the model? What is the make? Things like this, right? But now you could go into some pretty big equipments. Right now we have a agent that submitted an equipment, $1.1 million equipment. It's a food company that purchasing this special equipment to produce food. $1.1 million. They want to know what type of equipment are you talking about, right? So invoice is very important. Just like a car, you need to get an invoice. You need to know what the engine size is, so on and so forth. So the same thing with equipment. So the second thing that the lender look for is the vendor. Is the vendor a legitimate vendor? They do evaluate the vendor, make sure that they don't just take the money and run. So equipment loan works like this. You submit a loan to the lender approve it. They will send the money to where? To the vendor, not to the client. Okay. They don't want to give you the money to the client and the client takes the money to have a party. Okay. It doesn't work that way, right? So they want to make sure that the money it's used to purchase that equipment that he said he's going to purchase. So they will send the money to the vendor. And when they receive the money, they will ship the equipment to the client. So that is how it works. So that is why they do need to evaluate the vendor, make sure that they're legitimate. Okay. So that is the two things. Now, of course, if the equipment is more than $100,000, so in this case, we do need to look at financials, 2 years, normally 2 years of tax return and 6 months of bank statement from the client to make sure that their business is able to support the loan. So equipment loan, tons and tons and tons of equipment loan out there that I see just recently. I see so many gap funding requests coming into the pipeline. And we have our advisors to go out there to talk to this client, asking them, why do you need the gap funding for? And quite frankly, I would say 50-60% of them saying that, oh, I need the money to buy equipment. Much, much faster. Takes about 3 to 5 business days to get it worked. So go out there to look for equipment, whether you are restaurants, whether you are auto shops, whether you are doctor's office, you have a lot of opportunity right there. Now, the dollar amount might be small, but you get your commission much, much, much faster. Okay, so that is equipment loan. Next one, it's okay. This one is very interesting. This one you can call it a trailer, but this is what we call heavy equipment. Okay, this is a company. It's a company that he would like to purchase a food truck like this. And however, he wants to purchase it based on his specs. So that's a brand new food truck, a trailer, not a truck. It's a trailer. Okay, it's a brand new trailer. It's not even built yet. So the whole thing costs about $40,000. So the uniqueness of this thing is that equipment is not produced. So other equipment loan, what happened? It's already made. You send it, you send the money to them, they ship the equipment out, and that's it. But for this particular one, what the manufacturer need to do is that, hey, you need to give me the deposit first. You give me 50% deposit, I will start to manufacture or build this trailer for you. And after I build it, you pay me back the other 50%, then I ship this thing to you. So that is the uniqueness of this. I didn't even know things like this could be done. This is my first time dealing with something like this also. But long story short, we got it done, got a lender that can fund 100% of this equipment, and we did pay 50% to the manufacturer. They got the money. It took them about 2 months to build a truck like a trailer like this and ship it to the client, and yada yada yada. Then we got this thing funded. So that is the uniqueness of it. This is my first time. So again, I mean, that's the fun part of commercial lending. You know, you run into new stuff, you learn new stuff every single day. So that is the food truck right here. Let's talk about, okay, this one I want to spend a little bit more time. This is what we call the mid-construction bailout loan. It's pretty complicated. Mid-construction bailout. Okay, so this is a construction loan. What happened is that for this particular client in California, he already started construction. It's a ground-up construction. It's an experienced builder. And however, because of COVID, whatever that might be, I mean, obviously in today's market, you can blame COVID for everything, right? So because of COVID, the cost gone up, the permit got delayed, the workers not coming back to work. There are many different reasons. So it caused him to, it caused the budget to go up, and he about to run out of money. So in order for him to get this project done, he needs about $500,000 $500,000, $600,000 to get to the finish line. So in this particular case, he's about 50, 60% done. And when you remember one thing, guys, when you go out there to look for mid-construction funding, is very difficult. Why? Because a lot of the construction lender do not like to fund mid-construction projects. The reason being is that they don't know what have you done in the past to get to this stage. Okay. And did you follow the code? Did you meet the spec? So on and so forth. So there will be extra underwriting effort for the lenders to fund a mid-construction loan. So just imagine if you are doing, let's say you're a programmer, right? You program something and halfway through you're not doing it, you're not doing it anymore, and you have someone else to come in here to continue on with the program. And that can create a lot of conflicts. So same thing with construction. So a lot of the lender will have question about what have you done? And, do I feel comfortable to give you the money, so on and so forth. So it's not easy to get it done. And that is one of the reasons many mid-construction projects cannot get funding. I'm not saying that, we can do all of them. The reason that we can fund this particular one is because this gentleman right here is an experienced builder. He can show very, very detailed record of what he has done from day one. Okay. And again, he can show all the licensing, he can show all the draws, he can show all the permits, and so on and so forth. And the good thing about it is that for this particular one is that the shell, it's already complete, meaning that the windows in, the door is in, and everything is, the property is actually enclosed. So in this case, even though, yes, it's a mid-construction project, but because the framing is already up, the electrical, everything is already up, all he needed to do is to finish up the kitchen and put up the drywall and, finish up a few more things. Then he can, finish up the construction. So we call it as a heavy rehab. So even though it's a mid-construction, but we structure the deal as a heavy rehab. So what is a heavy rehab? Well, let's talk about construction. What is a construction? A construction is that you build everything from the ground up, right? That is construction. What is a heavy rehab? The house is already there. You go in, you tear down the kitchen, you tear down the wall, now you rebuild the whole thing. That's heavy construction. Now to the lender, what would be more risky to you if you were the lender? What would be more risky? A mid-construction loan or a heavy renovation loan? Absolutely, a mid-construction loan would be more risky. So we construct the loan as a heavy renovation loan, and we got it passed. The lucky thing for him is that he already got majority of the main structure is already done. The main components already in the house. He got the electrical, he got the water, he got the gas, he got everything in there. And all he needs to do is just to close up everything. So that makes this deal that much attractive. So again, that is what we do behind the scene every single day to talk to our advisors. We put our heads together how to put this thing together. So many of our agents, when they submit the deals to us, I know you're anxious about, hey, what is this? How can we do this? What is the status? How come it takes so long? There's a reason behind it that takes so long. The reason behind it takes time is just because the difficulty of the deal like this, it's not like straightforward like a 1 to 4 unit investment property where I can just give you a quote right there and then we close the deal in 30 days. But for something like this, it does take time for us to think it through how to package the deal together to present to the lender so that they can accept it and waste as less time as possible to get to the approval. So if we submit this thing into the lender immediately as a mid-construction deal, most likely they will kick it out and saying that, hey, I don't want this thing anymore. This is too risky. I don't need it. And then we have to end up going to somewhere else to keep looking for other lenders. So behind the scene, when a deal comes in, and that is why I've been telling everybody, when you submit a deal to come in here, what happened? The advisors will think it through how to put the deal together. And that takes time. So please allow us to work for you and work for your client. And if sometimes it takes time to do it, please forgive us. We do put our heart and effort into every single deal. I mean, at the end of the day, sometimes it doesn't work. It doesn't work. We tried the best we can. We come back with no solution. No one is willing to take it. And at some point, we exhausted all of our resources. Then we will let you know. There's nothing that we can do. So a lot of when the deal is not workable, a lot of the agent would say, "Oh man, why would it take you so long to tell me that it doesn't work?" It's because we have to go through that process. We're not giving up. As long as there's an opportunity or there's chance for us to close the deal, we will explore that opportunity. And after all these, if we cannot get it done, then we let you know we cannot get it done. So that is what happened behind the scene. Okay. So that is mid-construction. We got this thing funded. We're happy about it. Next thing. Now, this one, the uniqueness for this one is the client. He is a truck driver. He has been in business for 5-6 years already, experienced driver. He already have a truck and two. And when he came to us, I don't know how he found us. He did a search. He did a search on the internet. He found us and called us up saying that, "Hey, I saw you guys can do truck funding. Can you fund me a truck?" And I say, "Absolutely, we can fund you a truck." So with his profile, it's pretty easy for us to do because he has been in business for 5 years. He already owned 2 trucks and he's purchasing a third one. No brainer. For something like this, $22,000, and we fund it in 7 days, 100% loan. And he's happy and he's on his way out. And he come back to me saying, "Hey, Alan, I might be purchasing another truck. Is it possible? Can I still get another one?" And I say, "Mike, why don't we do this? Since you keep coming back to me, we have an affiliated program in Sequoia. Okay. So why don't you join our platform and fund your own deal? And you make commission out of it." And he's saying, "Well, really? Can I do something like this?" I say, "Absolutely." Okay. Go to our website, take a look at the different type of product that we can offer you. Already reached our website already. So, see if you're interested to come on board. So, hala, he did. And he came back, look at this. The first truck that he purchased is in June 8th, 2003. The second one, he came back in July 13, 1 month later. He came back and purchased a second truck. I say, "Mike, let me show you how to do it. All you needed to do just to submit a scenario form and submit the invoice just like you have done before. Okay. And I can fund you in 7 days," which we did again, funded in 7 days. And now, not only that, now he got 2 trucks, but he also is a Sequoia consultant. And now he's out there talking to all his truck friends and letting them know that he can fund trucks. And now we are funding quite a bit of trucks right now because of him. So that's another thing about the beauty of our platform. It's so flexible. I mean, you can talk to anyone, people that needs the funding. We talk to a lot of real estate investors that come to us to look for funding. And best yet, I told them that, "Hey, why don't you join our affiliated program? Now you are doing fix and flip. Do you know anyone else out there doing fix and flip?" You say, "Yeah, absolutely. There's tons of them out there." So instead of you, every single deal you go out there to look for a lender, why don't you join us? Why don't you become your own loan consultant to fund your own deal? So that is another, there's another thought for you to look at. A lot of these clients, they know other clients that in the same industry. Many times when you go out there, what is the best way for you to get client? About this, why would they send you referral? If there's no incentive, why would they send you referral? Let them know, "I don't need your referral. I do not need your referral. Why don't you join the platform and you do your own deal? And that's what happened with a lot of real estate agents. I talk to many real estate agents right now saying that, hey, don't even send me deals anymore. That is how Sequoia platforms got started it anyway. I tell them, do not send me deals anymore. Okay, just join the affiliated program. You do your own deal. You submit your own deal. You help me. You help the company to collect documentations, and that's all your jobs. And let us close the deal for you. And now we can officially pay you the referral fee or commission, however you want to call it. So that is how we build our business network as well. So that is the uniqueness for this particular one. We turn the client into a Sequoia affiliate. Last but not least, I'm running out of time right here. Last but not least, so for this one, also COVID impact. It is true. There's so many businesses out there are impacted by COVID. Okay. If you pay attention to it, you can find them every single day. This particular one right here, he owns a restaurant up in New York. Again, restaurant. Okay. Yes, many restaurants are impacted by COVID, and that is a very good source, especially for restaurants that owns real estate. There's a lot of business out there. So for this particular client right here, COVID hits, business got shut down. He's not able to pay the mortgage for 3 or 4 times, and once you cannot pay your mortgage, count on it. The lender is going to start the foreclosure. The lender is going to come and try to take your property away. So the way they do is that they will stop taking your payment. Even though you want to send them the payment, many times they do not take it. Okay, they will just go through a foreclosure process. Because you have to understand, a lot of people ask, why don't they take it? In commercial and residential is different. Okay, residential, I think there's some sort of laws, and you have to give the opportunity for the homeowners to make up their mortgage payment. But in commercial, it doesn't work that way. In commercial, the lender's thinking like this: now you are not paying me the mortgage. You're saying that you can make it up. How can I guarantee that in the future you are not going to run into the same situation? I don't want to take that risk. I'd rather take my money back and lend it to someone else. So that is the logic behind it. So now once they start the foreclosure, that is going to turn to be very, very ugly. If they really able to take the property away, and guess what? The business is gone also. He's running the business in that particular building. So do you think that this client can go to a local lender and get a loan? Absolutely not. They try many different ways. And especially, and also there's a lot of lenders, even though on our side, a lot of lenders don't want to touch property that is in foreclosure because there's a lot more risk for them. But however, there are lenders out there that is specialized in foreclosure bailout, and which we have many lenders in the Sequoia platform can do something like this. So if you have a client that is in a foreclosure situation like this, we absolutely can bail them out as long as the project makes sense. I always say that, right? So as long as the project makes sense. So for this particular one, again, it took a long time for us to get this thing funded. It took us about 2 months to get it funded. When the lender looked at this, again, they like the property. We just like the first example that I show you, we find a local lender who understands the market, who knows the area. They looked at the property, fine, there's no problem. And they like the property, they're ready to issue a term sheet. But now when we look at the payoff, when the first time the payoff came out, it was talking about, oh, you owe me about $500,000. And now when we fund $500,000, then the lender say, no, you need to add the attorney's fee, you need to add the foreclosure fee, you need to add all kind of consulting fee into it. And now the loan amount is $600,000. Now we have to increase the loan amount. So back and forth, it took us about approximately 2 months to get to the funding day. But even though at 2 months, it's still worth it. Why? Because we feel good as a lender, because we help our clients to get out of the bankruptcy, get out of the foreclosure. So now nobody's watching his back. We gave him a 24 months bridge loan. So for the next 24 months, no one is watching behind his back. Now he can really seriously to rebuild his business. And he is happy about this. now clients like this, you might interest to find out what is the interest rate, right? What is the interest rate on this? I tell you, the interest rate is 13.99%, 14% interest. Now, do you think that's high? How do you compare, right? What do you compare to? If you compare to somebody that is just come out here to purchase a regular loan, yeah, absolutely, 14% is high. But to him, it's not high. He is so happy that we are able to get him a loan and get him out of bankruptcy, out of foreclosure. So now he does not have anybody to behind his back to try to take his property away. Now he can settle down and really, really put his mind together to rebuild the business. And guess what? How long is the loan? 24 months. Because this is a bridge loan, it's a high interest loan. Nobody would like to stay in the interest or such a loan for a long time, and you cannot afford it. Okay, so that is what a bridge loan is, to get you from one place to another place. So hopefully after 2 years or even less, he can rebuild the business, have enough income coming in, and we can refinance out for him to a long-term note. So one deal, one client, for sure, we can do deals twice. Now, for loans like this, and especially they are in bankruptcy or if they are in foreclosure, there's no way for us to get him a long-term note with low interest rate. There's no such loan out there. So the way to do it is that we have to put off the heat first. Put off the heat, give him the money, get him out of that nasty situation, clean him up. Now, then we can rebuild the business, rebuild his profile, and then later on we can to get to a much, much lower interest rate, so on and so forth. Okay. Those are all the deals that we can, I mean, not all, those are some of the deals that we have done, I think is very unique. But along the way, you see a lot of working capital, you see a lot of equipment loans, and so on and so forth. So when you come into Sequoia, what do you want to do? It's totally up to you. If I were you, I look for deals that is low-hanging fruit that I can pick today and close in 5 days, in 10 days, in 15 days, in 30 days. When I got into this business, my commitment to myself is that I have to get a paycheck for every pay period. Every paycheck for every pay period. Okay, so it's totally up to you. What do you want to do? Right? So that is all I have for today's presentation on the case study. Go out there. We can do a lot of things. A lot of things that people cannot even imagine is doable. We have the ability to do it. So our job as a consultant is that every single day we talk to you on the field. If you have any questions or whatsoever, feel free to text us, send an email to us, and send an email to support, whatever that might be. I mean, we always respond to you. Always. Our day-to-day job is to talk to you. If you have a loan scenario, don't wait. Just call us up. Alan, can you do this? Alan, can we do that? Melissa, can we do this? Melissa, can we do that? So that is what our job is. Okay. Without talking to you, that means that there's no business. So we want to talk to you. We want you to close deals. We want you to make money in this industry. And this is the perfect time for us to really, really build a commercial lending industry, or build a commercial lending business. And I don't know. I mean, I think for the next 2 years, 3 years, alternative funding, like what we do, will dominate the market. Okay, so that's all I have. And if you have any questions or whatsoever, feel free, unmute yourself, and let's share. Okay, I see right here, there is Claudia asking, is it like an equity loan? What is it like an equity loan? I'm not sure. But equity loan is not a loan. It's an investment. I might want to do a training on what equity loan is. But in a nutshell, what equity is, that equity loan is that there are investors out there, they will look at your property and how that property increased in value for the last 10 years. And based on that model, they will project what that property will increase in the next 10 years. So based on that, they will come into saying that, hey, okay, in that case, I'm going to give you X dollar amount of money. Could be 100,000, 200,000, and you use this money, whatever you wanted to do. There's no monthly payment. Yes, there's no monthly payment. You don't need to pay them back for the next 10 years. But when the time comes, then you have to pay them back a percentage of your house. So give you an example. Let's say the property value worth about $500,000, and they give you $100,000 today, and they were saying that, okay, fine, 10 years later, give me back 30% of your house. So 10 years later, that $500,000 house increased to $600,000. So now you give them back 30%, which is $180,000. The other way, if that $500,000 house go down in value to $300,000, for example, you still give them back 30% of that $300,000. Now that you take back $90,000. So they make money together with you, they lose money together with you. So equity loan is not equity share is not a loan. It's actually an investment. So I will be doing a detailed training on that. Okay. How can I talk to you, Luz? You can talk to me. Let me put my number right here. Okay, that is my number right here, Lou. So feel free to call me, text me, WhatsApp me. I'm on WhatsApp all the time. If you call me, I don't pick up, that means that I'm on the call. So text me, WhatsApp me, and I will get back to you. Okay. Abina, you have a questions? Feel free. Unmute yourself. And Lou saying that, can you do some seminar in Queens by October? Yes, absolutely. And as a matter of fact, we are talking to go up to New York either late September or early October. Yes, we can definitely talk about that, and talk to me offline. And by the way, we are going to Atlanta, Georgia next week, and you should have received emails, invitations, and flyers, whatever that might be online. And if you don't, go to our Facebook, go to our YouTube, or text me, and I will send you the invitation. Next Friday and Saturday, we will be in Atlanta, Georgia. Abina?
Yes, how you doing today?
I'm doing fine. Thanks for asking.
Great. I have a quick question. I didn't get the understanding about the equity loan. I understand that you said of how they will have to pay it. What I'm trying to find out, what if they're having problems with their credit or their income or so like that, but they do have equity in their home that they want to pull out? What are the processes or the step is that based off of?
Okay, so for equity share. Okay, so first of all, not every state have equity shares. So if you go to our website, I suggest you to go to our website, click on equity share, and go to that page. There is one question saying that, hey, how many states can equity share in? You click on it, it will show you all the states. So I think today there are only 13 states can do equity share. It's just because of the jurisdiction, because of the laws and regulations and things like this. So not every state can allow this type of product. So you go in there and make sure that you take a look at it and see which state. Now, even though that state has equity share, they might not invest in a particular zip code. So all you have to do is just to go in there and click on the link, put in your property address. It will spell out immediately, tell you that, hey, is your property qualified for investment or not? If the property qualify for investment, most likely they will tell you, hey, that based on the profile, this is how much I would give it to you. If there's no number comes out, most likely there's something's missing. Then one of our specialists will contact you to let you know exactly what it's needed. So I would suggest you to go to that webpage to get more information out of it.
Okay, gotcha. And one last question. I wasn't on for the fix and flip for the rental property portions. When I read on the page, it indicated that was based off of your credit and 2 bank statements or so. Is that I was just trying to find out what are they? I guess the detail of what they're looking for on those type of loans.
You're talking about fix and flips?
Yeah.
Okay, fix and flips. Yes, credit is very important. Okay. The lowest credit that we can go down to is 620, but you do need to have a lot of experience for 620. Normally, if you are just just came into the fix and flip business, or you don't have that much experience, normally the lender's looking for somewhere around 660 and above. Okay.
Okay.
So fix and flip works like this. You have two part of the money. You have the money to purchase the property, and you have the money to what? To renovate the property, right? So depending on your experience, the lender will give you up to 90%, or in some cases can give you up to 100% of the purchase money and the renovation money together. So let's say in a case where they're saying that, okay, I can only give you 90%. You need to show them that you have 10% to put down. And that's where the bank statement comes in, that you need to show them that you have the liquidity to put down.
Okay.
Again, go to our YouTube channel. There it's a training on fix and flip.
Okay, good.
Okay.
All right, gotcha.
Yep. Anything else? Anyone else? Moto saying that I have questions regarding to real estate tax deed certificates. So what is the question, Moto? No, it's not Moto, it's Eve.
Mr. Allen, it's Paulie DeGuay. How you doing, sir?
Hey, Paulie, how you doing? I showed a Moto right here, so I thought that's your name. What's up, buddy?
I'm sorry about that. Yeah, is that actually something we can do with financing for, I think it might be more like working capital to purchase the real estate tax deed certificates. Because I had some guy that reached out to me on my social media postings and everything. He wanted to know if there are investors or private lenders that we can do this for.
I don't think so. Real estate tax deed certificate. Again, this is more like a tax sale.
Okay.
Right. So you're not actually purchasing the property itself. You're purchasing the tax. So I don't think any lender out there would fund something like this. And you're right. For somebody to come in here, got to be an investor. And we don't have investor that is deal with something like this. So most likely it's going to be a private investor. This is a very, very niche type of investment. So the more anything that is niche, nobody likes it, because the lender would think that, hey, if I give you the money, okay, if I give you the money, and if you take the money and run, what is the collateral right there for me? Right.
The property.
Right. So again, I mean, it's not the property, it's the tax. The tax certificate, right? Gotcha. So again, to a lot of the lenders, this is to them is not a collateral, and they would not fund something. Well, at least I don't know anybody would do something like this out there. But if you are purchasing a property, of course, I mean, all day long. But tax certificate, yeah, I don't think anyone that I know or the Sequoia's profile database would have any lender would fund something like that.
Gotcha. Okay. Yeah, because he was telling me that it would. I'll tell you what. Can I give you a call?
Yes.
After this and everything.
Yeah. Call me tomorrow. Tonight, I actually have another meeting after this, so call me tomorrow. We can talk about this.
I'll give you a call tomorrow. Okay. We'll talk more.
Yes, sir.
Thank you, sir. Thank you.
Okay. Will you come to Florida anytime soon? Yes, absolutely. I'd love to come to Florida. So again, let's talk offline. And normally when we travel to other states, we don't just go there for fun, right? We want to go there to build a hub and explore that area. So normally the way to do it is that if you're in the Florida area, you look for a few key leaders in that area. I call it the core group people. And we have a Zoom first. We talk to these core group people. If they don't all understand what we're trying to do, now each one of these 5 people go out there to invite 5 people. Now all of a sudden you got a 25, 30 people seminar. In that case, yeah, I can go down there. But if you just have 1 or 2 people, it doesn't make sense for us to go down there. But I would suggest you to invite them to the training like this, so at least they know what Sequoia is doing first. And we love to go down to Florida. Absolutely. Okay. Is there funding available for someone who would like to invest in internationally? Yes, we do international funding, but international funding, it got to be make sense. So we have lenders that can fund construction project outside of the United States, but most of these lenders are looking for funding, are looking for project that's at least in the $50 million and above. The bigger the number, the more attractive the lender would we fall into. I mean, they love big projects internationally. If you're talking about 100,000, no. I mean, they should have go to locally to look for fundings like this. Now, however, if you're talking about international outside of the United States, that people that is coming into the United States, foreigner coming to the United States to invest in the United States by purchasing property, yes, we fund that all day long. So hopefully that answers your question. If you're just going internationally, just purchase a property overseas, the only way to do it is that, hey, if you have any collateral here in the United States, we can, cash out and you use the money to do whatever you want to do. Okay. Building project internationally. Yes, absolutely. So again, the bigger the loan amount, the better it is. Ideally $50 million and above. If you're talking about the Caribbeans, Canada's, and that is close to the United States, probably $20-25 million to start, to start the loan. But it depending on where you are internationally. Okay. China, no. No China these days. You know the situation between United States and China right now.
Yeah.
Okay? There it's
right.
Tim. So there's we have a lot of lenders that is actually used to fund in China, but they pull away from China. So unfortunately,
I got another deal. That's why I was asking.
Right. Unfortunately,
Okay.
I mean, I know a lot of Chinese in my community, and everybody's asking me the same thing. Alan, when can you fund China again? I wish I do, but unfortunately, I mean, the lenders just don't feel
Fair enough.
comfortable. Right.
Very good.
Okay. Okay. So it doesn't look like any more other questions.
Alan,
Oh, yes, sir. Who is this?
hey, this is Damon.
Oh, you're the $500 million guy.
What's going on, guy?
I
Hey,
doing
I-
good, doing good.
Got a question. The gift fund, the LLC situation. So I have an individual who wants to purchase a piece of property, or that whole scenario. If they create an LLC and they put their other person on to their LLC, do they then in turn keep them on the LLC until the loan is paid off and then pull them off, or how does that work?
Okay, very good. So when the lender fund an LLC, they only fund the LLC. They only fund the company, right? So now inside of the company, you can have multiple members, or the
Okay.
members can change. So imagine Microsoft. Who was the first CEO for Microsoft? Bill Gates, right? So now let's assuming that Microsoft go out there to get a loan, and Bill Gates was the CEO at that time, or the president at the time. The fund is actually longer to Microsoft, not Bill Gates. So now what happened when Bill Gates left the company and there it's a new CEO in Microsoft? What happened? The loan's still the same because the company didn't change.
Right.
Does that make sense?
Yes.
So same thing with LLC. So now when you do the loan, now you have two person into the loan, which is by the operating agreement, right?
Mhm,
So
mhm.
now the funding is lended to that LLC. Somewhere down the road, the agreement change. One partner saying that I don't want to be in the LLC anymore. So he can get out of that LLC anytime as long as there's an agreement between
Mhm.
all party. So now
Mhm.
that guy is out of the LLC. Now it's only one party, one member LLC. But that loan doesn't change because that loan is to that LLC.
To the LLC.
Right.
Okay. Got it. Thank you, sir.
All right, guys. Well, we already passed the hour. Thank you so much one more time to come
Excuse
to
me, Mr.
another
Allen.
episode. Oh,
Real quick, what's the website to look at the videos online? Is it under the company name?
okay. Let me show you.
Okay.
Okay, right here. The first one, www.youtube.com/@Sequoia Lending.
Sequoia Lending. Okay.
Please subscribe to it. If you're not on our Facebook, please connect to our Facebook because all these information we'll post to the Facebook anyway. Okay.
Sound good. All right. Thank you.
All right, ladies and gentlemen, again, thank you so much for another night in Sequoia Lending, and hopefully you can utilize this knowledge and know what you can do. Go out there and let people know your ability. You are the money man, you are the money woman, You have unlimited amount of money waiting for you to distribute to the businesses out there. Through you, money will go out. Okay, so remember that you are the money guy and you are the money woman. So until then, good night, everyone.
Thank you.
We see you.
Good night. Thank you.
Thank you, Mr.
I will
Allen.
call you tomorrow. Thank
Call
you.
me,
Good
okay?
night. Okay.
Okay.
Thank
Bye-bye.
you. Good night.
Good night. Bye-bye.
Bye.